Everyone, this is Ben from Shutterflow, and back here again for another weekly recap video. And by the way, the dark pools were really insane last week. Yet again, we had a $4.6 billion worth of accumulation at that 448.56 level on the S&P 500. This is a very significant signature print that we saw. Also, the week prior, if you remember, in our other weekly recap video, we had the 9.2 billion SPY dark pool print, which was the fourth largest one that I have in the last 3 years of data. So really was substantial. And in our Discord, which is free, by the way, you can join with the link in the description, we said there was a potential of it being actually a down. So if you click on it here, you can see I was personally thinking that it would go down just because we had rallied quite a bit off of the previous amount of accumulation that was lower during the corrective phase. And then we were up around like 458, and it did actually sell off after this print. So it most likely was a sell. And this one right here is happening near lows on SPY. So potentially maybe it's continuous selling, or it could be a buy for a few more days up. So something to note going forward. However, there are some weaknesses in the other markets as well. We saw IWM. If you looked at our Twitter account, we also did a mini clip on this. Basically, this one was consolidating for about a week, actually broke to the upside of that consolidation, but then fell back down, retraced, and actually fell back in the consolidation period, and then fell down again, and now has formed a bear flag. And what's even more interesting is the fact that this bear flag had a head and shoulders, which is a bearish pattern, a very common bearish pattern that has a good probability of success to the downside. So head and shoulders right here, you can see the head and the two shoulders. Now we're testing the bottom of the trend line again. So this is when it starts to get a bit in the danger zone, at least for IWM, for that Russell index. And because of this, it can weigh a little bit on the other indexes for the S&P 500 and also the NASDAQ. So we're definitely going to want to watch that. As of now, SPS has had a very difficult time getting over my yellow trend line right here. So this basically, we crossed above this yellow trend line back here when we had that big rally. We actually fell back to it. We retested it, bounced, but then fell back under again, and we have yet to get back over, which is a bearish sign. So that could be the potential of why we saw this $4.6 billion print, because it's had a lot of difficulty getting back over it. So it could be a sell at this level. But yeah, definitely gonna have to watch the price action for this next week for sure. But yeah, this is what I'm thinking right now in terms of a technical analysis standpoint. Along with that, we do need to talk about Apple. This one had a lot of bearish prints actually hit the tape on Friday. We had a $1.8 million print for super far out of the money, 135 strike. They bought this when it was at 171. So this is very far out of the money, especially for Apple. This was a block print, so this was an institution. And we also had another print for 3.2 million in premium at that 160 strike. So what I did basically was I saw that these strikes were getting hit with a ton of money, by the way. So this is a lot of money, very uncommon for Apple to have this much for this far out of the money. And basically I looked at the strike that was picked and kind of checked on the chart where those would land. And it actually makes sense why they chose at least the 160 strike. Basically, this $1.9 billion dark pool print was over here during this rally. I've talked about it before in our previous videos. If you are subscribed, you would remember this one. If not, subscribe below. It's completely free. But 1.9 billion is a ton for Apple. This was a massive dark pool print, and it basically set up the rest of this rally for the remainder of the time that it rallied. And it actually converges with that strike that we just showed you right here of 160 for that June or July expiration. Also, what it would converge with is a complete back test of this previous channel that we were within. So basically, this blue line right here and this other blue line right here is the channel that we were trading within for quite a while. And we broke out of it when Apple rallied big time. It would not be a shocker if we did retest about 159-ish to 160 in the near term, whether that be within the next few weeks or next month or two. I would not be shocked to see a complete retest of this. It would need to retest to see if it's strong enough to bounce back up and go a bit higher, or if it's not strong enough, it would fall back into the channel. But would not be surprised, and that's probably why they chose this strike. Now, the other one was 135. So there's a potential that they're playing a spread here on these Apple contracts, because they could be selling the 135 and don't think that it's actually going to hit and just collect the premium on that, because this is quite a ways down. It'd be very difficult to actually hit 135 all the way down here, especially within the time that was given on there. So I'm not looking at that one as much as I am the 161. This is the one to kind of look at here. Very interesting. It converges with a complete back test and also the level of that dark pool print. So definitely something to look for, especially if we get other prints similar to this one in the future. One thing I quickly wanted to note out was the fact that Twitter actually had a lot of bullish flow this week. And again, we at the start of the week, we had that news that Elon Musk bought 9.2% of the company. And we've actually seen a lot of continuous bullish activity throughout the entire week. Typically, we see like when big news comes out, maybe that first day, it's a bit bullish with that big gap up, and then it kind of like fades off. However, the bullish activity has stayed pretty consistent, and I filtered this for the entire week in our historical flow tab for over $100,000 worth of premium, or $200,000 worth of premium. And we've seen a lot of bullish bets on this one. You could just scroll through from the entire week. A lot of huge ones that were coming through. We saw some crazy ones like this, an 80 strike that they got at the 50 spot price for a leap for next year. So basically a year out, they're predicting this thing will be at 80. So pretty crazy. This one was an opening order as well because the volume is over the open interest, which we talk about in our other videos. But yet some pretty crazy bullish bets on this thing even after the news came out. So people are pretty happy the fact that Elon is joining that board of directors, and as a result, the flow is bullish along with it. So just wanted to point that out to you guys. And lastly, we do have to check out the VIX. Remember, this is the volatility index for the S&P 500. Basically, when this goes up and when this is bullish, that's bearish for the S&P 500 and the markets in general. Just because it's basically the inverse. And we were seeing quite a bit of bullish prints for the VIX on Friday. We saw a $4.2 million in premium one, about 10,963 contracts. So that's quite a bit for this 30 strike, which was out of the money. Also, again, we're seeing that expiration for July, similar to the Apple one that I just shared with you before. So interesting there. But also we saw a lot of other six-figure worth of premium out of the money contracts being bought for the VIX. And my thesis with this is, one, they do want to hedge potentially their downside risk if they do have a lot of long positions, because we were up quite a bit on the market. But then also we do have OPEX this week, and I think a lot of people kind of forgot about that. April 14th is OPEX, and something to look for, as well as April 12th is the CPI data, and characteristically CPI data has been pretty bearish, at least for the market. So that's potentially why we're seeing some of this hedging come in on Friday prior to this big upcoming week where there could be potential bearish catalysts. So something to look for as well. And then also, we are basing on the VIX right now. We had a back test of this last line that I had on here, but as of now, not looking insanely bullish. We need like a few strong candles to start an uptrend again. So as of now, nothing super like big to be worried about in terms of like increased selling on the S&P 500. But as of now, it kind of looks like it wants to base in this level, kind of around these supports that we're seeing. And then if it's able to get back up over this purple line, that's kind of when we're starting to get into more bearish territory for the S&P 500. So definitely you could mark this on your chart. But otherwise, not seeing anything super bearish in the market. These are just probably hedges for this week because of the potential for there being bearish catalysts. But other than that, that will be it for me today in this video, and appreciate you guys coming out to watch, and I'll see you guys next time.